Guys, so today I'm going to be going over a market review that we had discussed with our community. We had targeted two of the plays, which were Nike and FedEx. Now FedEx, they represent a lot of shipping for a lot of e-commerce, and if they do well and Nike does well as one of the biggest sports retailers and brands out there, it's a signal that the economy and people are still spending money, right? So I believe this is a huge indicator of why we went long Nike for the 117.
Season's over, and when does it start? Because earnings season is like literally
Okay. See, this is fun too. Earnings season is over, right? But that means now it's going to be a mega cap run up for the next earnings season, which is Q4, which is the best earnings season for all the tech and discretionary. So if you see anything oversold, right, this is the chance to start buying it into this week. So if you see Apple that's oversold, if you see like cosmetics, Etsy is one of a really good one. FedEx, UPS, Nike are all going to be reporting into the next 2 weeks. So look at Nike, that's on the 20th. FedEx is going to be coming up. So if you see these like holiday shipping companies, shippers are also good. I like Nike going into 117 still. 111 to 117. I still like BA. So I'm just going to be like looking to load for all the pullbacks for especially travel sector and discretionary. And my favorite discretionary is going to be Nike.
earnings on Nike is on Tuesday after hours, after market closes. Okay, so
my target was 117 and it hit 116 that morning. So I got out of all my calls that morning, that CPI morning. I was just like boom, 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 out. So how I trade is I'll give a range, the high and the low, right?
Yeah.
Nike, you have to know what happened last quarter. Last quarter, they reported strong earnings and they actually gave good guidance, but the price was a little bit high compared to the rates and everything. So it pulled back down to $88. Then it started climbing $1, $1 every single day. And it finally went from 88, 89, all the way back up to 107. Then on CPI, boom, it shot up to 116, pulled back again to 105, right? So if you want to target an area, you can either go for 95 into last quarter, or you can go into this recent high. So that totally makes sense because it's only what, like 10 points away. This is just off memory. I'm not even like saying anything. So now I'm going to check the expected move. It's showing 8. So if it's showing $8, 112 to the 99, like that's 7 out of the money, right? Both way. And the implied volatility kind of dropped. That means the cost of these two is going to be about $300. So the time decay is 44 cents. So if it's $5 minus 2 days of time decay, then you have to take off 80 cents, right? So it actually becomes like about a 460. So $300 investment becoming 460 or more.
Okay, so you're saying do strangle, so what you're just saying, right?
That's what I would do because we don't know what's going to happen. I'm more leaning towards bullish just from where we saw it, but then
because Nike's gonna be a big play, and I think Nike's gonna be an obvious play for me. Earnings was right here. Okay, so Nike's earnings into the day, Nike dropped 15%. It gapped down, is what it
but
did.
then right away it opened up like 5 points higher. I mean, like 40% on the option.
Right.
But they're expecting to kill earnings. You know that, right?
No, they're not. Actually, that is false. That is not what they said in their Q3. This is their Q3 earnings transcript. They are not. They're saying we are going to face more complexity. They're saying our inventory is building, shipping time and cost. These are going headwinds. We're facing supply chain headwinds. They're saying that.
Okay, they're expecting higher revenue, but lower EPS. So I agree with you. It could go down, right? And the IV right now is not that high to affect or have to go into a further expiry. So a 30% IV change is not going to give you like any kind of really like major crush on the short term, because 30% change times 0.05 is barely going to be like 15 cents on your option. That's not a big deal for the short term. The IV crush will be 15 cents. That's not, yeah, it's $15.
So I think Nike's gonna be a big play for everyone, and Esther goes over the various, I'd say, risk tolerance, right?
Look at this one. Look at FedEx. So FedEx tends to move a lot, and this one they're actually expecting a decrease in both revenue and earnings per share. And last quarter it was at 157, and then it dropped to 152. This quarter they're expecting it to drop again on both sides, earnings and revenue. This one's gonna be an easy puts play.
Puts.
Yeah, look at it. They're both gonna be expected to go down. And look at the price it was last quarter. I'm gonna show you. This one was 152 at open last quarter based on the results.
Yeah. Okay.
But look at this next one I posted. It's like even on last quarter's results, it dropped to 152. And so it's 20 points above, right? So if Nike is kind of still like a branded name versus this one is saying we're gonna suck next quarter. I mean, not suck next quarter, this quarter already. And it's somewhat higher, a lot higher than last quarter. I think, I don't know. Both of them have good opportunity.
Like,
let's aim for like 160. And this gets in the money, the 160, then it's gonna become $7, $6, and it's only like $1.70. So if it goes up, then where does it go? It's like 185. It goes down, then
I like both plays. I like that FedEx Esther is bearish on FedEx. Makes sense to me.
I like the 160 for FedEx just because last quarter it was in the 150s, but then it also opened up into the 160 area. Like it was in between that area. 152, and then the next day went to 160. So going into the 160, I feel like, you're gonna make sure that you could be in the money. But let's say that there's a sell-off tomorrow into Tuesday and it goes to 160, right? Don't swing. It's gonna change. So if your target hits by earnings date, you have to change your strategy. You have to keep that in mind.
She's saying take your puts profit because now you've already made that money. You don't have to swing it anymore. And I would say that's good general risk management advice. Okay.
If it's end of the day, but if you want to swing, I would definitely just go for 2 weeks. So make sure to follow and subscribe and like the channel so that we can continue to post the videos, get more tips, and you can join us in our community if you want to trade the quarter four run up on earnings. Well, happy holidays, and if I don't see you, my dog's gonna growl at you. No, I'm just kidding. Bye.